Hello there, welcome to Austerity of Wisdom. In today's video, we will be talking about presumptive taxation scheme. Let's start with business. Setting up a new venture, one of the first questions you encounter is what legal entity it should be set up as. Well, depending on nature and size of the business, some of the legal entity options are available. They are sole proprietorship, limited liability partnership aka LLP, private company, public company, joint venture. Then comes the question about books of accounts. Well, if as a business any of the following criteria are met, then maintaining the books of accounts is mandatory as per the Income Tax Act. First, income is more than 1,20,000 or total sales, turnover or gross receipt are more than 10 lakh rupees in any of the three immediately preceding previous years. This condition has been relaxed for individuals and HUF, where they will be mandated to maintaining the books of accounts only if income is more than 2.5 lakhs or total sales, turnover, gross receipts are greater than 25 lakhs in any of the three immediately preceding previous years. And if failed to comply with, there is penalty too. If you have not maintained the accounting records which you should have maintained as per the law, you would be liable for a penalty of up to 25,000 rupees. Now let's talk about tax audit and its due date. For businesses having gross receipts of more than 1 crore in a financial year are liable for tax audit. And the due date of filing the tax audit report is 30th September of the assessment year. The tax audit report must be filed electronically in Form 3CD. Under normal circumstances, revision of a tax audit report is not possible. However, in cases where accounts have been revised, it is possible to revise the tax audit report too. Presumptive taxation for businesses is covered under Section 44AD of the Income Tax Act. Any business which has turnover of less than 2 crores can opt to be taxed presumptively. They must declare profit of 8% for non-digital transactions or 6% for digital transactions, whichever is applicable. However, some businesses are excluded from presumptive taxation. They are life insurance agents, commissions of any kind, running the business of plying, hiring or leasing good carriages. Now that we know about presumptive scheme, let's see some benefits of presumptive taxation. In presumptive taxation, your net income is considered as 8 or 6% of your turnover based on your mode of transaction, and you will pay tax on that income accordingly. You don't have to maintain accounting records or to get audited. You have to pay advance tax, yes. But instead of estimating income and paying tax each quarter, you can pay all your advance tax before 31st March. Advance tax for taxpayer having opted for the presumptive scheme is to be paid by 15th March of the relevant financial year if you expect your income tax liability will exceed rupees 10,000 in that financial year. Let's talk about professionals. Income tax law provides a list of professionals. They are engineering, legal, architectural profession, accountant, medical, technical consultant, interior decoration. Professionals carrying on the above mentioned specified professions are required to maintain books of accounts in accordance with Rule 6F of the Income Tax Rules. Such professionals will be required to maintain accounting records if gross receipt exceeds rupees 1.5 lakhs in any of the three immediately preceding years. In case he has started off with his profession in a particular year and his receipts exceeds 1.5 year for that year, he is again supposed to maintain accounting records for that year. The accounting records that has been prescribed under Rule 6F are cash book, journal, ledger, and you have to maintain photocopies of all the bills or receipts if the value is more than rupees 25 and the original bills or receipts if the value is more than 50 rupees. If you are into medical profession, you must maintain daily cash registers with details of patient fees receipt, services provided and dates of receipts, and stock details of medicines and other consumable items additionally. If you are carrying on any profession other than those discussed above, You would need to maintain such books of accounts so as to enable an assessing officer to calculate your taxable income as per income tax laws. However, this mandate would arise only when income, if you are an individual, exceeds 2.5 lakhs or gross receipts are more than 25 lakhs in any of the three immediately preceding years. Presumptive taxation for professional is covered under Section 44 ADA of the Income Tax Act. A professional having a gross revenue up to 50 lakh can opt for the presumptive scheme of tax, wherein he can straightaway offer 50% of the gross revenue as his taxable income and pay taxes as per his slab rates on such income. Once he opts for this scheme, he cannot claim any of the professional related expenses as deduction again. Further, anyone opting for this scheme is not bound by the mandate of maintaining books of accounts too. While he is also liable to file his return by 31st July of the assessment year, he must file his return in ITR 4. Further, he will be liable for tax audit in a scenario where he offers income lesser than the income arrived at on presumptive basis, and also his income exceeds the basic exemption limit. Freelancers who are into any of the specified or non-specified professions get covered under the same rules as applicable to any other full-time specified or non-specified professional, be it rules of computation of taxable income and tax liability, maintenance of books of accounts, presumptive tax, return filing, etc. TDS deducted by foreign clients. Well, don't worry, you can still claim it. Forms to file for income tax return. For 44ADA, it's ITR 3, and for 44ADA, it's ITR 4. Thank you.